Your credit history is a record of your borrowing and repayment behavior, which reflects your ability to repay debts. Lenders, employers, and even landlords may review your credit history when determining your financial reliability. A strong credit history is crucial for securing loans, getting favorable interest rates, and even renting a home. It's built over time and reflects how well you manage credit and debt. A strong credit history is essential for achieving financial goals. It allows you to qualify for loans with better terms, such as lower interest rates, saving you money over time. A good credit history can also increase your chances of securing a rental property, getting a job, or opening a new line of credit. It provides a sense of financial security and opens up opportunities that may otherwise be unavailable. Monitoring your credit report regularly is the first step in building a strong credit history. You're entitled to a free credit report from each of the 3 major credit bureaus, Equifax, Experian, and TransUnion, once a year. Reviewing your credit report helps you identify inaccuracies, fraud, or missed payments that could negatively impact your score. Ensuring your credit report is error-free is essential for maintaining a positive credit history. Your credit score is a numerical representation of your credit worthiness, typically ranging from 300 to 850. The higher your score, the more favorable you appear to lenders. It's determined by factors such as payment history, amounts owed, length of credit history, types of credit used, and recent credit inquiries. Understanding your credit score allows you to track your progress in building a strong credit history and make adjustments to improve it. One of the most significant factors affecting your credit score is your payment history. Consistently making payments on time, whether for credit cards, loans, or bills, demonstrates to lenders that you're reliable. Late payments can severely damage your credit score and take years to recover from. Setting up reminders or automatic payments can help ensure that you never miss a due date, making timely payments a cornerstone of your credit building strategy. Credit utilization refers to the ratio of your credit card balances to your credit limits. Keeping this ratio below 30% is ideal for maintaining a strong credit score. High credit utilization can negatively impact your credit history, signaling to lenders that you may be over-relying on credit. By paying down balances and keeping your credit usage low, you demonstrate responsible credit management. Opening too many credit accounts in a short period can hurt your credit score. Each application for credit results in a hard inquiry on your report, which can lower your score temporarily. Multiple inquiries in a short time may signal to lenders that you are in financial distress. It's essential to be strategic and only open new accounts when necessary, allowing your credit history to grow steadily over time. Using credit responsibly means only borrowing what you can afford to repay and avoiding unnecessary debt. Having a mix of different types of credit accounts, such as credit cards, auto loans, and mortgages, can be beneficial for your credit score. However, it's important to manage these accounts carefully. Using credit responsibly builds a positive credit history, showcasing that you can handle various types of credit and repay them on time. The length of your credit history is a factor in determining your credit score. Closing old credit accounts can shorten your credit history, which could negatively affect your score. Keeping older accounts open, even if you don't use them often, helps maintain a longer credit history and strengthens your credit score. If you must close an account, consider closing newer ones first. A healthy mix of credit types, such as credit cards, installment loans, and retail accounts, can benefit your credit history. Lenders want to see that you can handle different types of credit responsibly. However, it's important not to open accounts just to diversify your portfolio. Focus on managing the credit you already have well, and your credit mix will improve naturally over time. Paying off any existing debt, such as credit card balances or personal loans, is essential for building a positive credit history. Outstanding debt can negatively affect your credit score and make it more difficult to obtain new credit. By paying down debt systematically, you reduce your financial burden and demonstrate to lenders that you can manage your obligations effectively. Many services and credit card companies now provide free access to your credit score. Keeping track of your score regularly allows you to see how your financial actions, such as paying off debt or making timely payments, are affecting your credit. If your score drops unexpectedly, it can serve as a red flag to investigate further and take corrective action. Staying informed ensures you stay on top of your credit-building journey. If you miss a payment or fall behind on a loan, it's crucial to address the issue as soon as possible. Delinquencies and defaults have a significant negative impact on your credit score. Communicate with your lender to make arrangements, such as setting up a payment plan or negotiating for a settlement. Promptly addressing missed payments helps minimize damage to your credit history. 14. Rebuild credit after financial setbacks. If you've experienced financial setbacks, such as bankruptcy or foreclosure, it's possible to rebuild your credit over time. Start by paying bills on time, reducing credit utilization, and applying for a secured credit card. A secured credit card requires a deposit and serves as a way to rebuild your credit with responsible use. With patience and consistency, you can gradually improve your credit history and score. Debt consolidation can be an effective way to manage multiple debts, but it's essential to be cautious. Consolidating debt may help reduce interest rates and simplify payments, but it can also come with fees and the potential for additional debt if not managed properly. Carefully consider all options and make sure that consolidating your debt will lead to a more manageable repayment plan. If you're just starting to build credit or are rebuilding a poor credit history, a secured credit card is an excellent option. With a secured card, you provide a deposit that serves as collateral, and your credit limit is typically equal to your deposit. Using a secured credit card responsibly by making timely payments can help establish or improve your credit history over time. Building a strong credit history doesn't happen overnight. It takes time and consistency to establish a good credit score. Stay patient, make smart financial decisions, and avoid shortcuts. Over time, your efforts will result in a solid credit history that opens up opportunities for better financial products and favorable loan terms. Credit monitoring services can help track changes to your credit report, alerting you to any discrepancies or fraudulent activity. These services typically notify you when there is a significant change to your credit, such as a new account being opened in your name. Monitoring your credit can help prevent identity theft and ensure that your credit history remains accurate. If you're struggling with managing credit or repairing your credit history, seeking professional credit counseling can be beneficial. Credit counselors can help you develop a strategy for paying off debt, improving your credit score, and achieving your financial goals. They can also help you understand the steps you need to take to build a strong credit history moving forward. Each time you apply for credit, the lender performs a hard inquiry on your credit report. While a single inquiry won't significantly affect your credit score, multiple inquiries in a short time can lower your score. Limit credit applications to those you truly need and space out inquiries when possible. Being mindful of credit inquiries helps protect your credit history and maintain a strong credit score. If you're new to building credit or looking to improve a poor credit history, becoming an authorized user on someone else's credit card can be a helpful strategy. As an authorized user, you benefit from the primary cardholder's good credit history. This can help boost your credit score, provided the primary cardholder makes timely payments and maintains a low credit utilization ratio. It's a good way to establish credit without taking on the full responsibility of a credit account. Paying only the minimum payment on credit cards can lead to high interest charges and extended debt repayment periods. To build a strong credit history and reduce debt faster, always aim to pay more than the minimum. This reduces the amount of interest you pay and decreases your outstanding balance. By paying down your debt more aggressively, you'll improve your credit score and establish a positive payment history. While it's important to avoid unnecessary debt, using credit strategically during emergencies can help you maintain your credit history. For instance, using a credit card to pay for urgent medical expenses or car repairs and promptly paying off the balance shows lenders that you can responsibly handle credit in unexpected situations. However, always aim to pay off emergency expenses quickly to prevent high-interest debt from accumulating. Co-signing a loan for someone else can impact your credit history and score if the borrower misses payments. As a co-signer, you're legally responsible for the debt, and any mispayments or defaults will be reported to the credit bureaus. If you're building your own credit history, it's best to avoid co-signing loans until your financial situation is stable. This protects your credit and ensures that you don't take on additional financial risk. Retail store cards often come with high interest rates, and while they may offer discounts on purchases, they can damage your credit if not used responsibly. Opening multiple retail store cards to take advantage of promotions can lead to high credit utilization and multiple inquiries on your credit report. If you do use retail cards, ensure that you pay off the balance in full each month to avoid unnecessary interest charges and maintain a positive credit history.